Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management, home of the Flying White Horse. Today is Tuesday, October 25th, 5:22 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, overall still in a bear market correction, but in a strong short-term uptrend. We've had 3 strong up days in a row, starting with Friday's follow-through day. Those familiar with the Bill O'Neill methodology will know what I'm talking about. Let's check over here in the trend gauge. Yesterday, we upgraded market leaders from neutral to bullish, also updated our short-term trend indicator from neutral to bullish, and medium term, the 5 major averages, major indexes, approaching their 50-day moving average. Well, let's say 3 of the 5 are. One of them is above it. The Dow Jones Industrial Average actually 2 closes above the 50-day moving average. The NASDAQ 100 still the laggard, and it's going to be lagging even more tomorrow based on some preliminary week results to a couple of big tech names after hours. Long term, still decidedly bearish, trending under the 200-day moving average. So what happened today? Thursday, as I said, third straight strong day, but now the S&P into the declining 50-day moving average, which is should be big resistance. Wasn't for the Dow, but the indexes seem to react more to the NASDAQ 100 and the S&P and those key support and resistance areas. On the day, G6 certainly led the way. Didn't yesterday, but picked up the baton and ran with it today. This is our 6 ETF growth composite, up 3.04%, S&P up 1.6%, NASDAQ 100 up 2.1%, Dow up 1.1%, mid caps up 2.5%, Russell small caps up 2.7%. Global diversified 60/40 stock and bond up 1.42%. In-house, we continue to build some positions, up approximately 0.88%. We did a buy after hours today on Chipotle, so if you check your account after hours, it will be slightly off of this plus 0.88%. So let's dive right into it, and let's start, as I usually do, with explaining why we do what we do here at Revere. And I like this chart of the S&P 500 to explain it, because I can touch basically every strategic and tactical point that we use as part of our process. So we step back, we look at the indexes, we see where are they relative to 3 moving averages. Their short-term 21-day exponential moving average, their medium-term 50-day moving average. Short-term is the green line, medium-term is the red line, and the all-important long-term 200-day moving average. And when we're trending above all 3 of those, and the short term is above the medium term, which is above the long term, and they're all sloped higher, this is as good as it gets in the market. At this point, we're trying to sit on our hands and just let our positions work for themselves. Don't mess it up, because the market's in an uptrend. Now, that doesn't always continue. Sometimes we trend for days, sometimes for weeks, sometimes for months. But at some point, all trends will come to an end. We want to lock into some some profits when that does, and we want to be quicker to cut any new positions short if they falter. And again, we reference where is price relative to these moving averages. Sometimes they correct just barely. Sometimes they really start to roll over, and the slopes of the lines will roll over. At this point, our stops will take us out of the market little by little. There'll be fewer and fewer opportunities in the market, and we'll just build a cash position until the clouds clear. But sometimes the pullbacks can get extremely harsh, and when they break this black line, the 200-day moving average, this is when we really get defensive, and the reason for that is this chart here, the last 13 bear markets. We really cater to people that are approaching retirement, or people that just don't want to see money that they've earned just gone with the wind in a severe bear market. These numbers are nothing to joke with, especially the shaded numbers. Average of the last 6 severe bear markets down 44.5%. Back to even, you need 80% for that. Just this recent one, we peaked at from the intraday high to the intraday low from January to October of this year, down 27.5%. You need a 38% gain to get back to even. We're chipping away at it. We're actually down less than 20% now after today's gains. And when I say we, I mean the indexes, the S&P 500 in particular, is what this chart is showing. In-house, we're down about mid 8% year to date. Just barely one day got over 10%, but I've rallied a little bit over the last couple of days. So we feel we've done our job protecting capital. Now the market, with a follow-through day, off the lows, leading stocks acting well. We're going to let the market carry us. We'll get on the wave. We got on the surfboard on this move off the lows. This is one of our tactical entries. Added more to it as it continues to work. You can see these three strong up days starting with the follow-through day. So Friday, Monday, and Tuesday. But now we're into this declining red line, the 50-day moving average, which typically acts as resistance the first time you come up to it. Not always. Sometimes you get above it, and if you get above it, we want to see a successful back test, very similar to what happened here. And we'll, as I said, continue to ride the wave higher, keep adding exposure, taking some profits if we get too extended, and let the market decide for us how much higher we're going to go. When you manage risk and keep your drawdown small, the bull markets, the gains will take care of themselves when the market rights itself. And right now, we're just fine on a short-term trend. We're trying to get better on the medium-term trend, and then overhead now, we are just 6.5% away from re-entering above the 200-day moving average if we're fortunate enough to break through that. So there's your S&P 500. And if you're interested in an approach like this, we think it's a common sense approach. What part of your life, when things are going poorly, don't you try to take corrective action or minimize the bad side of things? And when things are going well, do you not have a smile on your face and let things continue to roll? That's what we do here at Revere. And if you're interested in this approach, email me, don@revereasset.com. You can also email Revere President, CFA Dan Stewart. That's dan@revereasset.com. He'd be glad to talk to you about all things financial, including estate planning. And or you can call us the old school way, 855-REAL-WEALTH. That's 855-732-5932. Give us a shout. At the very least, if you've got money with another manager and when you see the returns, when you contact us, if they're not up to par, you owe it to yourself to at least give a part of your portfolio to Revere and let us prove to you why our approach, active management, participation in the upside, protection on the downside, we think you'll be very pleased. So give us a shout. So there's the S&P 500. Now, third day up. I mentioned yesterday in the video, we didn't add much more today because you really don't want to be adding on the third day up, especially where it's near the top. We didn't open up. We opened about up 0.1%, but rallied strongly during the day. We just basically let our existing positions carry higher, especially our index long, which is the biggest part of the portfolio, and it's just continuing to go higher. And now we'll see what happens that we're into the 50-day moving average. Let's go to the NASDAQ 100 now, and I want to highlight negative reaction to earnings after hours by Google and Microsoft has the NASDAQ 100 down 1.4% after hours. So we closed 3.2% above the 21-day moving average, so still about a little over 0.5% above the 21-day. Any pullback to this 21 needs to hold. That's our line in the sand for anything tech-related. We're in the S&P 500 via UPRO. That's down 0.61%. It closed the day 3.3%, so still 2.7%, much better on the S&P 500. Any pullback here, again, we want to be contained by this 21-day, this now rising 21-day exponential moving average. The 21-day is at 37.32. We closed at 38.59. Ideally, any pullback will keep this, hold this 3,800 area, as that's the resistance area that we got above today, 3,800 to 38.15. We want any pullback on that to hold that area, number one, and then certainly number two, the rising 21-day exponential moving average. Let's go to the Dow Jones Industrial Average, 2 closes above the 50-day now, only 2.6% away from its 200-day moving average. Again, third strong day up. After 3 days up, we really need a little bit of a pause. Kind of take a look at, for comparison's sake, during bear market rallies that we've had here. Here's 3 days up here. 727, starting with 727, we had 3 days up, and then sideways for 2 days, tried to make a little bit of a pop, pulled back. This is what we really want to see. We need things to calm a little bit before we put much more money to work. We need to go sideways for a couple of days. You kind of also saw it here off the bottom 3 up days. That rally fizzled after 2 closes above the 21 and rolled over before starting again. And again, when we started again, here's 3 up days again, starting with July 19th, 3 up days followed by 2 out of 3 days pulling back right into the ADMA and the 50-day moving average in this case before reaccelerating to the upside. Here's a case of 4 up days. This is when the CPI report was negative and we had a harsh reversal on that. So 3 days up, I think we need a little bit of a break. I really will not chase things at this point unless we get something that has an earnings gap that is just can't be, that's just hard to resist, or a big gap up on volume similar to something that we bought today. And when we get to the tail of the tape, we'll talk about that. So let's go to mid caps, MDY, and they are right on the 50-day moving average here, as you can see, and small caps IWM right into the declining 50-day moving average again. So tomorrow's going to be a key day to see how we do relative to the 50-day moving average on the indexes. Let's take a look at a couple of other key charts, starting with gold. Gold reversed into the 21-day moving average today, just up fractionally. The VIX down 5% on the day. Very nice. 4 closes below the 21-day moving average, which has rolled over. We're getting further below this 30 area. And really what we want to do is get this 24 to 26 area is kind of neutral. If you get below 24, that's pretty bullish. TLT, why did we rally so hard today? Well, this is one of the charts. Big move up on TLT means a big move down on yields. Let's take a look at the TNX. Here's the 10-year, down 3% on the day, very big. Did close at the top of the range, but another close below the 8 EMA. You can see a recent pullback here. We had 2 closes below. So today's high is critical. If we get back above it tomorrow, that should probably put a damper on some things for the market. We want to see a further pullback closer to the 21-day exponential moving average. And also cooperating today was the dollar, down 1.1%, big move down. Decisive break of the 21-day moving average. We've been talking about that for a while, coming into its 50-day moving average. So bonds and the dollar really did help push the stock market higher today. Let's go quickly to a 5-minute chart on the S&P so you can see the intraday action. When the opening minute includes the low of the day, you know things are going pretty well. We accelerated to the upside. And all pullbacks were contained. They were mild, closed near the high of the day. Now, again, right now we're looking at a 0.6% gap down tomorrow. We'll see how things fare overnight. Let's go to the tail of the tape now. Well, before we get into that, let's take a look at the charts on some key charts from after hours. Let's start with Texas Instruments. This is a pretty big semiconductor. Not flashing. There it is, down 6%. So that's not going to help the NASDAQ 100. Google slowing growth across basically all of its business lines, down 7%. Note it ran into the 50-day moving average today. Microsoft, not quite as bad as Google, down 2.7%. We bought Chipotle after hours as it was gapping up on some earnings, but it seems to have reversed since then, and now it's just barely down. We'll see what happens with that tomorrow. It was briefly above the 50-day moving average before pulling back. We want it to hold, to get back above and hold this 50-day moving average tomorrow, or our stay in that is going to be very short-lived. So here's the tail of the tape. Technically, the indexes, oh yeah, I want to bring up this NASI RSI, which I meant to show last night and I didn't, but this is a tailwind for stocks. When you come off of oversold on the RSI and it hooks up and it corresponds with a hookup in the slope of the line itself, that's doubly strong, and now we're out of oversold area on the McClellan Summation Index for the NASDAQ. Wanted to include that, as well as the daily stochastic hookup on the indexes and the G6. Put call at 0.9. This was very low today in the 0.7s. We don't want to see that. That's too low. That's complacency, and it sets you up for a pullback. VIX at 28.46, down 4.7% on the day. Again, below the 21, but still above the 50 and the 200-day moving average. Fear and greed up big for the third straight day. I say the number is up, which is actually bullish. It's in the neutral range now. Operating under the bull case with the initiation of a rally with the follow-through day and a reclaim of the 21-day exponential moving average. Bear case off the table for now. But again, we need to hold the 21 and not have a rally failure. We did the highest percentages of rally failures happen when you have distribution on day one or day two after the follow-through day, and we came through those pretty much unscathed. In fact, closing up over 1% both days. So one less thing to worry about is always good. In news, Elon told his bankers, his confidants, Twitter, that he's going to close the deal by Friday. Supposedly he's going to lay off 75% of the workers after that. We'll see what happens with Twitter. As I said, earnings after hours, Microsoft down, Google down, CMG not up anymore, now basically flat. From day up 2 to day up 3, that's caution. 3 strong up days, closing at the high on the third day. In fact, closing at the high on all 3 days. You can go from oversold to overbought pretty quickly in an environment like this. And as I said, we really don't plan on plunging anymore. We got most of our positions in on day 1 and day 2. Earnings Thursday after hours are the next big 2 to look at. That's Apple and Amazon. Expectations now positive since the follow-through day. Strong third straight day. As far as support and resistance on the indexes, S&P broke above this resistance area at 3,800. Now we need to hold that on any pullback tomorrow after closing at 3,859. This big fib area on the NASDAQ 100, we closed just shy of that, but we're going to reverse hard off of that as of the open tomorrow if these overnight numbers on earnings on these big 2 tech stocks and Texas Instruments, big 3 really, if they stand. Here's the action. Anytime you make the low of the day right out of the box, you know it's going to be a good day. Here are the ranges overnight. Overnight was tight. That's why we were really looking for further consolidation today, but growth leaders led right out of the box. They were extremely strong. And just really seeing what you want to see after a follow-through day. Plenty of good-looking charts, plenty of pivots to buy. As far as what was strong today, bonds, as I said, which means interest rates down pretty big. The TLT, once again, down 2.9% on the day. 11 out of 11 sectors up, led by semiconductors, cloud stocks, building stocks, ITB, especially when you see interest rates down big like that, they're going to outperform. Real estate had a big comeback. We got stopped in our real estate short today. We took a 10% loss on a 1% position. So that's a 0.1% hit to the overall portfolio. Retail strong. Only thing down noticeably on the day was the dollar, down big, and that's good for stocks. Focusing coming in today, MedP was a pre-market gap up. Didn't know enough about the company, didn't want to plunge into it based on that, but really paid off, would have really paid off well. But now, when you're going to move like this, I mean, this just goes right to the top of the list to buy, up 38% on 846% volume. We got to dig into this a little bit more. It's liquid enough with the price to be able to get into We're just going to monitor here. And the first buy area would be a pullback to the 5 or 8 EMA. If we would have got in like right after the open in the low 200s and ridden it higher, we'd be fine. But when 40% is just a little too much for me, now I'm going to wait for a pullback back to the 5 or the 8 EMA. And if it continues to act well, you can see all it's really doing here is coming up to the top of the base. So this would have plenty of room to run if it continues to go higher, but MEDP certainly at the top of my watch list now. And then focus, of course, are breakouts holding? Yes, they are for the most part. And then the indexes, VIX, UUP versus the 21-day exponential moving average, everything working in our favor at this point. But again, I can't stress enough, after the third day up, now is not the time to plunge. Portfolio exposure up from 0.75 to 0.84 with a buy of Shockwave 2%. SWAV big volume right out of the gate above the 50-day moving average. We were looking at this in-house, talked about it on our call in the morning. Alex in particular brought this to our attention. Man, I'm so glad to still be working with Alex. I know he's not a full-time employee anymore for various reasons, but what a great trader he is, what a great reader of the market, and he's a serious asset to Revere Asset Management. Shockwave off of its highs on the day, but big volume move up out of this tight consolidation right below the 50-day moving average, moved up and out with volume, gave back a little bit more than I'd hoped, but that just leaves a wick for tomorrow. And we've got a very easy stop here, as this should hold the 50-day moving average on any pullback. DRV, we're actually using RWR, which is the Dow Jones Real Estate Index, strong above the 21-day moving average, and we hit our max loss. So out on that with a paper cut. And then CMG, already showed that chart. After hours, we bought 3% on that, and just not working as of the way it looks right now. So I guess the conference call isn't going well. That could be a very short-lived holding at Revere. Bottom line, strong day 3 up, closed just shy of the 50-day moving average. Some after hours behavior could impact this tomorrow. The big overhead resistance area now is this declining 50-day moving average. Pulling back, we want to see this most recently broken support area on the S&P. Big area here. It's the bear market dividing line at 38.13 and the 38.2% fib of the COVID retrace at 38.15. So that's a big area. We really want that to hold, or we'll have to start looking at getting defensive, maybe hedging, or if you get stopped out on your stocks, you get stopped out on your stocks. That's just the way it is. That's just part of the game. So that's where we are. Let's what other charts did we want to look at? So some things that we have been watching that had good days also. Let's go through a couple of those. Super Microcomputer gapped up. It hasn't reported earnings yet, but they upped their guidance on sales. Consolidated for 2 days, higher high today, nice volume patterns, earnings next week. Won't buy it with the earnings outstanding, although it pretty much is de-risked with them upping their guidance. DV, the initials sound familiar. Why am I not all over this stock? Gapped above this 30 area, which was huge resistance from back late last year. Any pullback toward 30 would be buyable on this. This is one I'll be setting alerts on as part of my post-market work tonight or pre-market work tomorrow. What else did well tomorrow? LTHM, former leader, corrected, but now coming back above the moving averages. The story is certainly still there for lithium with all of the EVs, but it has earnings next week. Some stocks with great fundamentals but questionable charts. Two in particular, Celsius here bounced at this 80 level right into the declining 21-day moving average. When you got the stellar fundamentals, you just got to wait for the chart to catch up to it. And that's what we're kind of doing with Celsius and with Bros. Bros has broken above the 21, above the 50, but still below the 200-day moving average. Recall that we bought this last time on this earnings gap up on 811 and got stopped out pretty quickly as it reversed. Any other big charts we want to go through? Let's look at Enphase, which initially gapped after hours, then pulled all the way back to where it closed. Right now it's up 5.65% at $280. So that would be put it above or right at its 50-day moving average tomorrow. This 50-day on some of these charts that have been correcting is serving as big resistance. We'll see which ones can get through and which ones can't. How about some things that we own in-house? STNG, we bought yesterday. That had a nice day, up 2.6% after the 4-day pullback. LNG was red most of the day, closed barely positive, but right on the 21-day exponential moving average. AEHR, very strong early, negative reversal. This just happens when you get too extended. It was over 3 ATR extended, so you're going to say, why didn't you take offensive selling measures at a +3 ATR? Because we only have a 2% position in this. If it was 8 and it was very liquid, that would have been a spot to take some off the table. With only a 2% position, we're going to let this ride and ride the 80 MA higher and hope that it continues. Or if it pulls back to the 8, we'll be looking to add more to the position. So that's AEHR. HLIT, the other leader that we've been talking about for a while, just continues on a tear higher. We're just going to let it ride the 8 EMA higher. Netflix, inside day yesterday. This is alternating strong days with consolidation days, and that's just fine. Big up day on earnings, inside day, another big up day, earnings +2, followed by an inside day, and then again another move making highs on day 5 after the initial gap up back above the 200-day moving average, coming into its pivot +20% area. We're not going to sell it there. We're watching for this 329-ish area, which is the bottom of this recent consolidation after from 3 earnings reports ago, to see if it has resistance there, or the Livermore 300 area right here. I, again, wouldn't be surprised to have it see, best case or worst case, it has an inside day tomorrow at the 300 level after another move higher, up 3% on some nice volume. And then, as I said, we added Shockwave, and we still own ERX, which is a broad energy ETF, 2 times ETF, and that's looking fine today, or the chart is looking fine as well. And then, of course, we've got 15% UPRO, which is the equivalent of 45% in the S&P 500. And that's going to wrap it. As always, love to hear from you. The email is don@revereasset.com. The phone is 855-REAL-WEALTH. So wrapping up Tuesday, October 25th, a couple of earnings hiccups after the hours in big tech. We'll see how they translate into tomorrow. Remember, folks, it's not how much you make in the market, it's how much of that you can keep. Thanks for listening and have a great day.